Hello, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. With us, a brand new guest, somebody I've been following for years in the gold world, and you can't separate the financial system we're in from the gold world because it is together, no matter what anybody says. With us right now, Bix Weir. Bix Weir, thank you for joining us today on USAWatchdog.com.
It's nice to be here, Greg, and I'm excited about today's interview.
Well, I'm glad you are, and I want to give a little bit more background. You got 30 years experience in finance in corporate America and some of the biggest corporations around the country, and I can mention who you work for now. But you also have your popular website, roadtoruta.com, where you talk all about gold. You also have been heavily involved with GATA, the Gold Anti-Trust Action Committee, GATA, for 13 years, and talking about, the suppression game in the gold industry. And I got to tell you, years ago, when you guys were getting hot and heavy with, all the FOIA requests and all that, people were making you out like a bunch of kooks, and we're not, there's no manipulation, and now, everything's manipulated, isn't it? Doesn't the king have no clothes? I mean, we have the interest rates with, the Federal Reserve suppressing interest rates. We have the plunge protection team, which is, the president's working group on financial markets, definitely real groups, and they're suppressing the price of gold. One of the main things, I think, is naked short selling. Where are we in the gold scenario right now? Probably a lot of people are on your case about, well, I bought gold at 18 or 1700, and look what I've lost money. I've lost some money. What do you tell people about this price suck down that we find ourselves in right now?
Well, I think the most important thing is to realize that gold is manipulated now and has been manipulated since, I would say, the beginning of time. But let's just go from the recent manipulation strategy. It really began in earnest in the 1960s with the invention of computers. And we all know about computers and how technology has changed our world. What we don't know about is how the inventors of the first computer programs, a guy named John Kemeny, invented basic computing. His best friend is Alan Greenspan, who invented the financial computing. And this was back in the 60s. So with that, they integrated computers into our markets today. And how long they've been manipulating the market is as long as the computers have been involved in the market, which is really the mid-70s. They really became involved. But now we can see it. We can see the manipulation in interest rates, in mortgage-backed securities, in almost everything that a computer touches on a trading scale. They're in there manipulating, they're steering us, and there really has been a little man behind the curtain pulling all the levers of our financial system, but now we're starting to see it, which is great.
Which brings me to my latest question, which everybody wants to know about, is that what happened? We were at 1900, everybody was talking about 2500, 3000, that gold was going to go to the moon, and actually it should. They're printing money like crazy. I mean, last week, the Federal Reserve Chief, Ben Bernanke, spent 2 days in front of the House, in front of the Senate Banking Committee saying, no, we're going to keep printing for the foreseeable future. We're going to just keep printing money. Don't worry, we're not going to stop. I mean, Chuck Schumer in the Senate was worried. Now, you're going to keep printing after September, right? You're going to keep printing to... all they're talking about is this money printing. So why the big takedown from 1900 down to 11 or 1200 back up to around 1285 or so right now? Why the big takedown? Where is it going from here? And why the big takedown?
Well, you kind of answered your own question. They are printing money. And the whole reason to control the price of gold is to control the perception that the U.S. dollar is a sound currency. So gold and the dollar are inversely connected. Robert Rubin was leasing gold back in the 80s. Larry Summers wrote the Gibson report that said, inverse relationship between interest rates and gold. They know that gold is the key to keeping this fiat system going. And they'll keep talking about, pulling back the strings and trying to watch their budgets, but they haven't done it. They haven't done it since the 70s, and they really have no intention of doing it. As far as the takedown from 1900 to 1300, they can place the price of gold anywhere they want. It has nothing to do with physical gold. 100 to 200 times the amount of physical gold is traded in the paper markets, the LBMA and the COMEX. And those are two electronic markets. Again, we go back to computers. How difficult is it for the Federal Reserve and the bullion banks to hit a 10 billion ounce sell call on the COMEX. It's a press of a button. They can set the price to $5 if they wanted, and they can set the price to $1 million if they wanted.
So where are they going here? I mean, is it never going to rise? Some people are throwing in the towel. They're capitulating. They're saying, well, it's never going to go up. But I see Ben Bernanke last week talking about all this money printing. How can it not go up? At what point does it break away from this manipulation? Will it be a lack of delivery at COMEX or LBMA, or will it be that the Chinese back their currency with the yuan, which many people have rumored? Or is it another bank like ABN AMRO? Today, last week, reportedly another Dutch bank says, "Yep, we're not going to be delivering gold anymore." What's the trigger that pushes it higher? If you think it is going to go higher?
Well, I think the trigger is in the derivative market and the implosion of the derivative market. That's the only thing that can really take the power of the bankers away. Right now, they control everything, control every market, can rig every market, make oil go up or down wherever they need it to go. But when the derivative bubble pops, and Warren Buffett talked about this, the weapon of mass financial destruction, it almost popped in 2008. And they got out of it. Hank Paulson went in front of Congress, demanded, I think it was $700 billion, and then they leveraged it to $12 billion. They needed that money to basically put a Band-Aid.
Wait, $700 billion to $12 trillion. Is that what you meant to say?
Correct, to $12 trillion.
I'm not trying to correct you. I just want to make sure. So they got $700 billion from Congress in the TARP money, and they leveraged it up to $12 trillion.
Plus, if you tack on the derivatives that they had added since then, who knows how many dollars, we don't even know what dollars are these days. Are they pieces of paper? Are they electronic blips? Are they derivatives based off of the dollar? Nobody really has a firm idea. But that's probably going to be the catalyst. And we are at a point in our system and in the manipulation where there are people within the Fed and within our government who are ready to pull the plug on the game and basically crash the system, and that's kind of where we are now.
Really? And they want to go back to a gold standard? Is that right, or come up with a new dollar?
Well, if you think about it, for the United States, it's the only way out of our mess. There's no way to pay off the debt we have. It was never the plan to pay off the debt. The debt has been growing and growing at faster and faster paces, especially since the Gold Commission review back in 1981. They concluded that we didn't need a gold standard, but in the conclusion also, they said at some point, if we keep printing money and throwing our budgets out of whack, we're going to have to return to a gold standard. If you look what's happened since 1981, the debt has gone through the roof, and it will continue to get bigger and bigger. But remember, we are the largest debtor nation in the world. If we collapse the system now and erase all debt, we win.
So you think that's the game plan? We're just going to say, all those bonds you have, sorry, bye-bye. What would gold have to be if we collapse the system? What would it have to be to equalize, so we have an economy?
Well, a collapsed system, which would be the follow-on of a derivative implosion. A derivative implosion would take down the banks. If you take down the banks, you take down every individual checking, savings, 401k. Everyone holds their money in banks. Even the brokerage houses have their money in banks. And the derivative situation is such a mess that once that starts to go, a couple of those big banks go, every other counterparty will fall too. So you're looking at a complete wipeout of all debt and all banks, all virtual assets. If you really want to take it to the end game, it's all virtual assets. Virtual assets meaning electronic blips on a 401k statement and a checking savings. I mean, virtual assets came about in the 1970s with the invention of the computer. People don't have much in their hands. They have their houses and their cars, but they look at their bank statement and they think that that's, somebody's holding that money somewhere for them. They aren't. They're out there gambling with that money on derivatives. That's kind of how it's all going to fall apart.
And you're saying basically the U.S. dollar is the original Bitcoin.
Well, this version of the U.S. dollar, I mean, since we went off Bretton Woods or Nixon took us off the gold standard, we haven't had a true gold standard in the United States since the invention of the Federal Reserve in 1913. So, everything since then has been going farther and farther away from the gold standard, and the U.S. dollar has been destroyed 98, 99% now. When will we hit 100%? Theoretically, when the derivative bubble crashes and all dollars are destroyed.
How close are we to that? Timing?
It almost happened in 2008. We were maybe hours away from that happening. And really what it is a loss of faith. In 2008, Hank Paulson said, if you don't pass this bill, if you don't give these banks all this money, you're going to lose everything, and everything will be wiped out, because we built this system on a foundation that is so weak and growing at the top and so small at the bottom that it can't withstand that kind of hit. They've delayed it for maybe 5 years now. But when it hits next, which most people are saying probably August, September timeframe, we're going to start to see some shaky banks. That's when the people are ready to stand up and say, no, we're not going to bail you out this time.
Is that what the bail-ins are about? That, we have $10.8 trillion in deposits. This is a stupefying number. $10.8 trillion in deposits at the FDIC. I looked this up, called the FDIC, confirmed it, with $33 billion in the Deposit Insurance Fund. Unbelievable amount of deposits for a paltry $33 billion against $10.8 trillion, $10.8 billion, $10.8 billion with 33 my eyes crossed. 10 trillion 800 billion in deposits, 33 billion in insurance. Oh, we have a line of credit of $100 billion from the Treasury. Okay, you have 133 billion for 10 trillion 800 billion. Are you saying that we're going to have these bail-in scenarios here in the U.S. just like Cyprus?
The banks would love that. The banks, that's what they're looking for. They're looking for the bail-in. No, we're not going to have it. They can't do it. The main reason that, and FDIC, when you throw around those huge numbers, that's nothing compared to what they actually insure. They actually insure all the derivatives of J.P. Morgan and Bank of America in the hundreds of trillions of dollars.
The FDIC pegs it at more than 200 trillion with just 5 banks or so. 200 trillion, the FDIC says, is in derivatives. Most of those are interest rate derivatives.
Correct. And then, because the banks have mixed in the derivatives with mom and pop savings account deposits as far as insurance, the FDIC, there's no way they can bail them out. First of all, the FDIC has very little money, like you said. Second of all, the only way the FDIC can get more money is to go back to Congress and have Congress approve another bailout. Congress will not approve another bailout. We've already bailed out the banks once. People are so angry.
So what's going to happen? What future cast here for me? What do you think is going to happen? You say it's going to get dicey in the September, October, or August, September time frame. August to October, let's say. What is your future looking like here near term in the next few months? What's it going to look like? What's the crash going to look like?
Well, when you run the scenarios, the banks want, they know they've been doing bad. They're getting regulators starting to do their job finally. The history of regulation has been to more run cover for the banks than to regulate them. But now there's more and more people who see what's going on. The banks want to take out some bad actors and then continue the con. And so that's their take. They think they can do that. I don't think they can do that. I don't think the will of the people of the United States is ready to say, yeah, let's bail them out again. It's the only way I can get my $400 savings account paid back. There's another scenario, and that's the scenario of wiping the slate clean. And wiping the slate clean basically is doing nothing. If we do nothing when the banks crash, then all money is wiped clean because everybody keeps their money in banks.
What about the
all debt is wiped clean?
But what about, I'm sorry to interrupt you, but what about the deposit insurance? People think, wow, I got $250,000 insurance and I got multiple accounts. I can have, $500 or, $750,000 basically, or at least $250 for my $5,000 account. Why wouldn't I get paid my money back?
Well, exactly. And that's what the 1% is going to say. But the 99% are going to stand up and say, no, we're done with this system. All we have is debt, and you have these assets in banks that are FDIC insured. We'd have to pick and choose. The FDIC would have to pick and choose who got paid back and who didn't because they insure everything.
So what would happen to the common man's $5,000-$10,000 in his bank account if, you know, a lot of people don't even have that, but what would happen to the common guy's money? I mean, you just going to tell him you have no money? We have new digits we're going to start over with? I mean, how would that work?
Well, that's what the Fed Boston has been thinking about and discussing in the work that I've done since the 60s. How do you reallocate money when the system crashes? Now, the guy who has $10,000 in the bank, most likely he's got, you know, $200,000-$300,000 mortgage IOUs. That will go away as well. So would you change the $10,000 you had in the bank that you're not going to get back? You made a bad credit decision giving that money to a bank. In exchange, the bank has lost all their money, sold off the house loans and mortgage-backed securities. That will go away as well. So, you know, the guy with $10,000 is going to end up owning his house flat out because the bank won't be able to confiscate it like they're doing now.
What about somebody who's renting that's got $3,000 or $4,000? Just sorry, Charlie, you don't get your money back. You're poor.
Well, it gets back to the people who will lose out the most are it's sad that there's not many of them. Are those people who are completely out of debt with a savings account in a bank that they thought was, you know, AAA rated, which it probably was when they put the money in. When you give people money, you are loaning that money to a bank. There's an FDIC insurance, but the FDIC is broke. You need to look at the credit of the FDIC and their ability to live up to their obligations.
So you're saying that when the push comes to shove, the FDIC is just going to say, well, you know, we'd like to insure you, and we said we would, but it's so big we can't really insure you. What happens if you had, you know, some of your money out of the bank in paper, you know, money that you had, you know, under the mattress or whatever? Would that money still be good, or would they change the currency at that point?
Well, there is talk of changing the currency. The new $100 bill that's coming out, I've written a few articles on this, has gold all over it. It talks about overthrowing your government right on the bill, that part of the Declaration of Independence where the people have the right to overthrow their government. It's right there on the front of the $100 bill. They've delayed it. If you think about anti-counterfeiting currencies, if you were going to do that in earnest, wouldn't you start with the most counterfeited bill in the world, the 100? They started with the 5, went to the 10 and the 20. What they're trying to do is destroy the dollar. Print as many as you can, get as many phonies out there as you can until it destroys the system, because we are the largest debtor nation. Our people are the largest in debt out of any nation. If there is a collapse of the monetary system, who wins? It's the people who have the most debt and will be out of debt. And then we have to really figure out how do we reallocate money to the populace. Because it will be different.
Bix, I'm telling you, by what you're telling me, it's going to be like Mad Max. I mean, shotgun shells are going to be going for a premium.
Not necessarily.
Well, how is somebody going to go down? And I'm not trying to argue, but how is somebody going to go down to the store and say, "Wow, I need a turkey sandwich, but I don't have any money." I mean, what are you going to do? Bring some, you know, dimes in, some silver dimes from 1964 earlier, or come in with a chicken and saying, "Hey, I'll trade you this chicken for, you know, whatever." I mean, how are people going to function? All of a sudden, poof, there's no more money.
Right, and it's a great question, and that's what the Federal Reserve Bank of Boston has written about since the 70s. How do you reallocate money after it collapses? We all know that every unbacked currency has collapsed. This is the only one that's lasted this long. It's lasted since 1971. And the only reason it's lasted so long is because of the computer programs rigging the market. We would have gone off the unbacked system back in 1981 when, you know, inflation was going through the roof. But we rigged the gold market lower, we rigged the silver market lower, we got everything under control and ran our debt through the roof. There is a plan. There has been a plan in place for 40 years in the United States. And it has to do with reallocating money according to how much you've paid into Social Security. And if you think about Social Security, if you make a certain amount of money over like $120,000 or something, they stop taking Social Security out.
That's right.
The whole reason behind that was this reallocation plan. That's why they haven't touched Social Security. That's why it's in a lockbox. And I know today Social Security money is nothing. You get a pittance and you can't live off it. But imagine if all money was gone. All the banks crash, the derivative bubble crashes, and go down with the money. They take the whole ship down. The United States would have to reallocate money to its citizens. And if everybody got equal share, it wouldn't be fair. And it's not fair already. But if you think about how many people have paid into the Social Security system already, it's kind of even more fair because those that work the hardest will have the most in Social Security, and those who are older, who you really have to convince about this new way of allocating money, will get the most first, and then those who are still working, the younger kids, will get more as they work more. It's actually, this plan was invented by Greenspan for Arthur Burns back in the early 1970s, and this is what he was doing when he was on the Council of Economic Advisors for Ford. He was working on how to fix Social Security and how to fix the U.S. dollar by crashing the system and re-implementing and reallocating money to the people through the Social Security system.
Well, if I buy what you're saying, and I don't know, that sounds awful dicey to me. However, who knows what'll happen? It's crazyville out there. Then I guess having some of the currency that we have today probably wouldn't be a bad idea. It would work. Bob Moriarty of 321 Gold says, he said this about a year or so ago, which I find it hard to refute this, that whether you like it or not, the currency we have today in hand is going to work pretty good for a while. And you're saying that they'll either take that old currency back in off the street, they'll institute new currency or digits or whatever, and it'll be tied to the gold. Is that right?
Well, there's a few things going on there. The first thing is it has recognition by the people. That's pretty much the only thing we recognize as money, those physical pieces of paper and the coins.
So that would work for a while.
I think it would work on a slow transition. The other reality is that the paper ones, not the coins, but the paper money are Federal Reserve notes. Federal Reserve is broke. They have no money. They create it out of thin air. United States Congress can shut down the Federal Reserve in a blink of an eye, and I think they will. Now, the question is, should they honor those bills for a while going forward until we issue Treasury notes? I think that would be a good plan. So if you have physical bills in your hand, and there is a banking collapse where all the banks take each other out, basically, by defaulting on all the derivatives they have with each other, you might be pretty well off if you keep your coins in the back of your closet and your bills in your hand, at least for a little while.
You're talking about the best thing to do is if you want to just have some money, go out and buy some rolls of quarters and half dollars, just the regular nickel plated quarters and half dollars that we have today, and go out there and store them as opposed to Federal Reserve notes, because those coins are not Federal Reserve notes. Those coins are quarter dollars, not quarter FRNs. Is that what you're telling me?
Well, yeah, all our change is minted by the Treasury and not the Federal Reserve.
That's very unusual.
So, yeah, it is an interesting concept. But if you're going to take that type of a drastic route, my number one investment is pre-1965 coinage, the silver coinage, because in the background of all this, the collapse of the monetary system, the collapse of the banks, people go into their checking account and not be able to get money out of their ATM. In the background, everybody will be scrambling for gold and silver. I don't think they will be traded at all, because it would be the last theoretical form of money that the people have. And every time an unbacked system collapses, every single time people go back to gold and silver as money. It will happen again, even though we've forgotten over the last 40 years what gold and silver really is. People are starting to wake up now, and when they can't get money out of their checking account because their bank defaulted, that's really when you're going to see people scrambling for physical gold and silver in your possession.
But you're also going to see some violence here. I mean, there's going to be some have-nots. There's going to be people with no money starving. Is that what you're telling me?
Well, there is now, but there will be a lot more when this collapse happens. That's why I think the plan that the Federal Reserve Bank of Boston has put together is so important, because at least we're a little prepared for what's going to happen, and there is a plan to get money back out into the hands of the people. Those have-nots will be a whole lot better off than they are right now when this thing smooths out. And it might take a few weeks to reallocate money according to, some will be according to need of the people, but some will also be according to how hard people have worked through their Social Security.
Well, maybe this is what these FEMA camps are for people who have no money. Now, if you want to eat, go to this FEMA camp. You want a roof over your head? You want your power turned on? Go to this FEMA camp. Is that what you're talking about?
I think that was the plan of the banks. the banks know this is coming as well. Their plan is to crash the system and take over control of everything and make you their slave. People within the United States government even, and within the United States, are trying to stop that from happening. And I think we've come a long way to awakening the people to what's going on. Everybody knows about FEMA camps now, and the good guys that I talk to are saying, well, why don't we throw these bankers in the FEMA camps that they built for us? They're perfect, for holding them until we figure out what's going on.
Is this what the trying to take guns away was all about, the steps to try to take it, which has fallen flatly? Is that what this is about? Because, armed people aren't going to go to a FEMA camp.
Well, there's very interesting things going on with the gun situation. What I like to do is look at the reality. And the reality is, like, when they said we're going to take away your guns, what happened? Everybody went out and bought a gun. They were running out of guns. When they said they're going to pull back on the budget, what really happened? They're printing money like it's going out of style.
They are.
I think the whole gun thing wasn't a plan to get guns in the hands of the people, and to really, because they know, the government knows that this stuff is going down quickly. These banks cannot survive much longer. They are literally on their knees, and the mainstream media is not going to tell you about it, but in the financial world, we all know about it, and it's not going to last long.
Well, there are big downgrades, I think, a week or so ago with, big banks over in Europe. Deutsche Bank downgraded. I think Barclays downgraded. There's some banks here, even though they're reporting big earnings, of course, they're, buying $40 billion a month, taking $40 billion a month off their books in toxic mortgage-backed securities, which is $500 billion a year. It's absolutely stupefying. So let me close the interview with this. Where do you think gold and silver are going in dollar terms or new dollar terms? If you have 100 ounces of gold, are you going to be like, the rich kid on the block or the target on the block?
For a while, you'll probably be the target. But, as far as if the dollar stays in place, if the system keeps going as it's going, they can place the price of gold and silver anywhere they want using computer programs right now. But as long as the Fed and the banks are controlling the price, they can price it anywhere. The moment they stop is the moment that gold goes limit up. Limit up meaning basically the COMEX and the LBMA, where it's rigged, shut down. And you really will not know the price of gold and silver for a while, because it's the anti-dollar. People will be trying to get their hands on it because the dollar will be basically disappearing. Either inflation or deflation, it really doesn't matter. Deflation is possible if every bank goes down, then all of a sudden nobody has no dollars. Inflation is possible with what they're doing right now at the Federal Reserve Bank. So either is possible. I think it will be neither. I think it will be a total destruction when the derivatives at these banks go off, and then everybody loses these electronic assets that have only been building up since the mid-'70s.
And what would be the relative price of gold in today's dollars terms in terms of buying power? That's all we have really to compare. 7,000, 10,000, 20,000? What would it be in dollar terms for people if your scenario comes true, where they're going to have a wipeout of the system, clean slate, boom? China, we don't owe you any money. Japan, we don't owe you money. Russia, you're holding bonds, and we don't owe you any money either. We owe nobody any money. Goodbye, bye-bye. What happens then to the price of gold? Where do you think it goes in today's dollar terms in buying power? If you can close with that.
Well, in today's dollar terms, it's difficult to say, because nobody really knows what a dollar is worth these days. As far as buying power, historically, it's been the price of a good suit. A good suit these days, what is it, $5,000 or $6,000 for a really good suit for an ounce of gold? Will that be the case? Nobody really knows. There's a lot of gold out there that people don't talk about and isn't reported, that the banks try to hide from people because they like, controlling the price of gold. So, purchasing power, if you have a couple ounces of gold and, even more silver, because it is a necessity in modern day life, you will be well off, beyond well off, between understanding that most people don't have any. I mean, we're less than 1% of the population who own physical gold and silver in your hands. And everybody, that's what people turn back to when currencies fail, gold and silver. So you'll be King Midas with a little pouch walking around.
Is that why we're seeing these price declines? Well, actually, it's gone up a little bit here recently, but these price declines and this, it's weird. The price has been going down and demand is going up. It's like, doing this. It's demand up, price down. What? I mean, it's rich people knowing what's insiders. Is that what you're telling me? Insiders, or is it just fear?
Not at all. The price of gold and silver goes wherever the rigging programs are set by the bankers.
But what about the demand?
99.9% of all trades are banks trading back and forth to and from each other to set the price on gold and silver. There are very, very few rich people in the gold and silver market trading back and forth to move the price. They just don't happen. Almost all trades are between banks on the derivative level, and it's all done out of the Fed, the New York Bank in the Federal Reserve Bank in New York, and at the Treasury. So the big problem people have is looking at gold and silver. The price goes up, the price goes down. They think people are buying and selling. They aren't. It's the banks setting, via computers, setting the price to $0 an ounce or $1 million an ounce.
But who's buying all this physical metal? I mean, that is a fact. The Mint came out a few weeks ago and said record demand for gold and silver eagles. Bars are flying out of COMEX and LBMA. Who are the buyers of the physical metal?
I am. Me and everybody who's been fighting this fight for a long time. You, I'm sure, own some as well. The big buyers are coming out of Asia. China, Russia knows everything we know. Putin sent his top financial advisor to the GATA conference instead of some big economic conference. He's known for years. So everybody who wants to return to a sound monetary system and understands that this is happening are buying gold hand over fist. They'll print as much money as they can to take that metal out of the hands of the bankers, out of the hands of the United States and England as well. And we have certain storages of gold that we have in the ground and at the Treasury that will come out when we're ready. But as far as the gold, it's leaving the banks' hands, the bullion banks, JP Morgan, HSBC, those kind of guys, and going to China and Vietnam and all throughout the East. And if we were smart in India, oh my God, the premiums in India are off the wall, and the government's saying, they're starting to make it illegal for people to import it. It's crazy right now as far as the physical market, and there's really two markets. The paper market that sets the price and the physical market, that's where you need to be. You need to go out and get physical.
And I know this is my last question. So you're of the mind that there is gold in Fort Knox, that the government wouldn't be that stupid to get rid of their gold, that we really do have all the gold in Fort Knox and then some. Is that what you're saying?
I think it's a moot point. 8,000 tons of gold is nothing. Nothing. There is so much gold in the world. It is all hidden away in the United States in secret caves of gold that Dianne Feinstein put into a natural wildlife preserve back in the 90s. We are saving all our gold. The 8,000 tons is just a figure piece. It's a joke. And China could buy 8,000 tons in a blink of an eye if they wanted tomorrow. That's not the issue. Do I think it's there? It was probably leased out years and years and years ago, and they keep one vault there so they can open it up and show the people, here's all your gold, and people can walk away. And as long as they're not handing it out to the people, they're doing other things with it.
All right, Bix Weir, the popular website, roadtoruta.com, and I got to tell you, this is the most contrary interview I've done in a long time, my friend, but I thank you for giving it to us. Thank you for putting your perspectives out here on usawatchdog.com, Bix.
Hey, thanks for having me on. And everything I said, and I back up with documents from the Fed, Boston, from all over the place. And go to my website, and you'll see exactly what I'm talking about.
Roadtoruta.com. Bix Weir, thank you very much for joining us today on usawatchdog.com.